And the fact that we've got runaway inflation that has not been seen since the 2008 recession, that should be worrisome too. Because if we have inflation and the Fed is making a commitment to maintain the interest rates between 0 and 0.25%, continue to allocate $120 billion worth of capital to buy mortgage-backed securities and U.S. debt, if they're not going to change that and inflation continues to mount, you could see gold really take off and silver really take off.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is Gary Wagner, one of the top gold forecasters. He is the founder of thegoldforecast.com. Gary, thank you so much for joining us today.
My pleasure to be here.
One of the topics that is really on the minds of many investors right now is what Powell just said. Now, we've had these inflation numbers come out for June, which is the highest we've seen in a while. I think it was 5.4% annualized. And Powell essentially says there's not going to be any policy shifts, even though there's incredibly high inflation, that this inflation is going to be, the key word is transitory. What is your perspective on his testimony?
Well, first of all, we have to realize in terms of how gold reacts to inflation, it is a double-edged sword. And what I mean by that is as inflation ticks up, and we'll get to what I feel about inflation in a second, that is a positive undertone for gold. But there is a fear that if the Federal Reserve thinks it is running too hot, they raise interest rates. Of course, that is a negative bias to gold. That's the double-edged sword. Well, basically, the testimony yesterday and today, Powell made it clear that he has no reason and does not anticipate raising rates because they want full employment. In other words, what he said is, let inflation continue to run hot. Now, he says a lot of it is transitory. And to some extent, I agree. Used car pricing, bottleneck, shortage supplies, yes. But if you go to the store, your goods and services are a lot more money. Energy is a lot more money. Now, there's two basic indexes that are followed. The CPI, Consumer Price Index, and the PCE. Now, the PCE is the preferred index that the Federal Reserve uses, and oddly enough, that strips out energy and food, really where we're seeing a lot of inflation. My sense is that he's correct in that there is a part of it that is transitory. But I also believe that a lot of it is going to be sustainable. I don't think energy costs are coming down. I don't think food costs are coming down. The labor force, as it returns, is going to require higher pay. So I think that that will be an added pressure. So my sense is the reason we've seen gold and silver kind of run up the last couple of days is because what Powell said is he's going to leave things where they are, even though he's uncomfortable with the rate of inflation. As you said, the CPI ticked up 0.09%. An annual adjusted rate now is 5.4%. In the 70s, when we had incredible runaway interest rates, we had 6.8% inflation. We're not that far from it on the CPI. As far as the PCE, their target was 2%. They said they'd let it run a little hot, but they kind of mentioned a ceiling at around 3% in terms of a comfort level, and we're at 3.4% now. So I think that the Fed is in a quandary, and there's a couple of things that Powell said that really send that home. First of all, he said that a while ago on the press conference of the last FOMC meeting, he was asked a question, and he said that unquestionably the path that we're on is not sustainable. In other words, you just can't continue to spend more than you have. But what he said today, I thought was really enlightening to give you an idea of the weight on his shoulders and other Fed members. He said, never in history has a government attempted to restart a $20 trillion economy after being shut down for a year and a half. And when you think of it in that way, these huge things, the fiscal stimulus, the monetary policy, all of the things that we have done to kind of restart our economy, they were needed. How we're going to pay for them is another question. How it will affect inflation, I believe, is it will maintain a higher point than we are used to seeing. Their target right now with the PCE is they're saying it should be 2.1% in 2022 and 2.3% in 2023. But where are these numbers coming from? Forecasting is a difficult thing, and even for the best, and the Fed members are the best at doing this, you cannot predict certain things. We have certain tools for inflation, but we can't control the cost of energy. We can't really control the cost of food. And so if goods and services continue to rise, inflation is going to really get greater. As it gets greater, gold will benefit from that.
You mentioned how it's really the first time in history that really we've had to restart an economy this big. Now, a lot of people are concerned right now about maybe further shutdowns, the COVID crisis coming back again, and people are talking about this new Delta variant. If we do see further shutdowns because of this variant, how do you see this impacting the metals markets and other markets?
Well, first of all, the financial markets, which have been on fire, always looking forward 6 months ahead, hitting new record highs, has hit a brick wall over the last couple of days. Whether or not it stagnates and trades sideways and then moves higher, or actually has a correction. We've had a runaway bull market in equities for years, decades, really, and we haven't had that 10% drawdown, which is typical of a market that runs up. At some point, that could occur. That would be very, very positive for gold because people would move into the safe haven asset group. What we saw when we saw gold going down was there was such a dynamic amount of money being put into equities. It was coming out of other assets. Liquidity theory is simple. Investors want to put their capital where they perceive it will get the best return. And it obviously wasn't in treasuries or U.S. debt instruments, even when they ticked up, even though they're down, but they were in equities. And so that was where we saw the pressure and dollar strength. And so I think that on a limited basis, the economy will continue in the United States to ramp up, and there will be exceptions in certain areas where you have large percentages of the population that are unvaccinated. I think the other issue that we really have to focus on is the fact that there's over 9 million jobs that are sitting unfilled. Now, I believe that a large portion of that is a workforce that is being subsidized on top of their unemployment. They're basically making the same amount of money and staying at home. That will end in September. And when that ends and you're pressed with paying your bills and now you're not able to, you'll find a job pretty quickly. I really believe that when push comes to shove, once that's taken away, we'll see the workforce return. They did a poll, and the poll asked, well, why aren't you taking the vaccination? And then one was asked, why aren't you going back to work? And the number one answer was fear of getting COVID-19. And so the answer is vaccinations. Right now, we're not seeing that. I think what we have to focus upon is inflation itself, because certain parts of this formula, such as food and energy, these are important goods and services that everybody uses. I know Hawaii is naturally a very expensive place to buy because we don't produce much. It all gets shipped in. But those prices, they've gone just crazy. I was looking at one item that was $27 a month ago. It's now $37. That's a big uptick in the cost of it. And it's a goods. It was a food item. And the fact that we've got runaway inflation that has not been seen since the 2008 recession, that should be worrisome too. Because if we have inflation and the Fed is making a commitment to maintain the interest rates between 0 and 0.25%, continue to allocate $120 billion worth of capital to buy mortgage-backed securities and U.S. debt, if they're not going to change that and inflation continues to mount, you could see gold really take off and silver really take off.
So what you're saying, kind of coming full circle here, is that you were mentioning earlier that some of this inflation might be transitory, but really food and energy are increasing, and that's going to have an impact, and that's going to be bullish for gold. Can you expand on how you see this being bullish for gold? What kind of impact do you see this having?
It's truly simple economics. And I agree with you. There's certain things that are transitory, such as used car prices, new car prices, and that's because of a shortage of chips. That will be solved. But the energy issue and the food issue is simply this. When your dollar buys you less goods, that is inflation. And that also devalues the dollar. In other words, if a loaf of bread was $1 and now it's $1.50, well, the dollar is basically worth less than it was before. And that would take the dollar lower, correct? And if it does do that, a lower dollar is going to have a big tailwind for the price of gold and silver because they're paired against it. If you have that coupled with buyers entering the market who are getting out of risk on or equities because the market is stalling in any way and moving them into a safe haven asset because they're not satisfied with 1.3%, which is what the 10 years are, or 2%, which is the 30 years, there's nowhere else to go. And cryptos is certainly not the area you're safe in. They went to 65,000 and crashed. And there is really no intrinsic value to a cryptocurrency except the supply and demand, the desire to own it or the desire to sell it. So where are you going to put your money that's safe? Well, gold is one way. The other thing is real estate. Real estate has gone up, I believe, in certain areas up to 12%. Here it's gone up, I think, a little bit more than 12%. So the whole thing is, yes, you can sell your property and make a lot of money, but then when you go and buy something else, it's going to cost you that much more. And unless you're downsizing, which is unusual, you're going to have to put out a lot more money. So gold and silver are a logical option. Now, I've always believed that every individual and every family should have 5 to 10% of their investment capital tied into physical ownership of gold and silver that they buy from a reputable place like Franklin Mint, and they put it in their safety deposit boxes in their house. I mean, a safe. You can put it in the bank, but I feel more comfortable putting it in my safe personally. And I will continue to buy gold coins. I don't buy them that often, but I started buying the Buffaloes because those are my very, very favorite, the Buffalo ounces, at about $1,400. So to me, where the price goes short-term or long-term doesn't matter to me because I know over time they're going to be worth more. So I think that the focus on either trading gold or owning it as a physical asset is going to only increase. Now, if the equities markets have a major correction, I'm not saying that they will. I'm saying that in every other circumstance after this period of time, something like that has happened. It has not occurred this time, which doesn't mean that it will, because we're living in a unique environment where these multinational corporations are making a lot of money, and they continue to do so. But if you get certain parts of the population that are not vaccinated, are not working, where they continue to be gripped by COVID and gripped by lockdowns, you're going to see issues, and those issues are going to be supportive of the precious metals.
And what kind of impact? So you're seeing a rise in gold, but also how do you see this inflation impacting silver? Do you see silver to rise just along with gold, or to outperform or underperform?
You know, silver's been caught really in a very, very narrow band. But I believe that ultimately, when it does react like what it did the last couple of days, I think we had a 50-cent rise either today or yesterday, it does so with a bang. Silver is much more volatile than gold. And I also look at it as the poor man's gold. In other words, if you can't afford to buy ounces of gold, it's easy to buy ounces of silver, which is why there's such a high demand from the public itself. I think that silver has a double good-edged sword in that it is basically the baby gold, but when you consider the infrastructure bill, which was something we wanted to touch upon, that has a lot to do with going green. And going green means solar and wind. And solar requires silver. Requires copper too, but that's a topic for another day. But I think that there's going to continue to be a large demand, a large industrial demand for silver, because it is the best conductor there is, and it is the one that is preferred for solar panels and solar installations. And there's so many incentives for individuals to go solar. As that builds, you'll see that really weigh on the demand side.
And mentioning the infrastructure plan, how do you think this will impact inflation?
It's interesting. What was passed was about $900 billion. He wanted $1.2 trillion. The key to this is that it is over 8 years. In other words, when we did a fiscal stimulus in 2020, we spent $4 trillion. That was money that was allocated. There's some still sitting there, but it was allocated for that year. The checks that went out this year, the 1.2 fiscal stimulus plan where everybody got checks, that all got spent this year. The infrastructure program is to spend $900 billion, not even $1 trillion, over 8 years. So I don't think it's going to have the same kind of impact as fiscal stimulus has had, because that's an immediate printing of money, where this is money over time. The other thing that I really have a concern about, no one has really mentioned it, and it was just a brief blip in the news about a week ago, and that was when Treasury Secretary Janet Yellen went to Congress and said, please, we need to raise the debt ceiling, because if we don't, I can't pay the bills. And never in the history of the United States have we been unable to make payments, at least on the interest of our debt. I believe it was Trump who put a cap on it, and she's saying to take that cap off, because right now I can't pay the bills. Now she's lobbying for different structures for corporate taxes and other ways to bring in the money, but she's going to need to raise the debt ceiling. And so it's critically important to understand that that is something that's going to outlast the vaccine and normalization. In other words, when we have a full rebounding economy globally, that debt will still be there. And how are we going to deal with that? And that's going to be a very interesting problem that needs to be answered.
Definitely. And it'll definitely be very interesting to continue to report on this issue, because the debt issue is a giant problem that the U.S. has and will probably impact us for many years to come. Now, Gary Wagner, thank you so much for your time today. Before we let you go, did you want to share with the viewers any last thoughts you had and where people can find you online?
Well, they can always find me online. I do a daily article for Kitco News called After Hours. But our website, thegoldforecast.com, has a daily video, newsletter, commentary, and actually issues trade recommendations. Anyone can go and try it out for free for 14 days and see if there's value to them, and then decide if it's something they want to continue to use. But you can do that without paying anything. So I would highly recommend that. If you're interested in candlesticks, I would recommend Nissan's book, his first book, and a book by Seiko Shimizu, because that's one of the techniques I use. But really, thegoldforecast.com, you can go there every day and read our opening letter without being a member.
Gary, thank you so much for your time. And once again, God bless.
My pleasure, and I look forward to doing this again with you.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded for physical delivery, vault storage, or precious metals IRAs. Excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.